Hello, everyone, and thank you for joining me. This is the morning market review with myself, Russell Shaw, I'm a senior market specialist at FXCM. It's Tuesday, the 7th of February, 2023. My email address is rshaw@fxcm.com, and I encourage anyone that needs to contact me to send me an email. I'm just going to go ahead and bring up the high-risk investment warning. Morning, Howard. Hey, Anna. Thanks very much, guys. I get a whole commentary of yes. So it helps me a lot. Don't stop. I just want to make sure that you guys are getting the full sort of communication. All right, let's bring up the market commentaries disclaimer. I'll keep this on screen for a few moments as well. So we're not going to go particularly long today, but there's something interesting that I want to show you. I think it's going to be quite interesting. I found it interesting. I'll show it to you in a moment. References Market Scope and Trading View. Just to give you an idea of we're going to be looking at DAX this morning. And to really start the discussion, I want to come back to Microsoft Paint, and I want to just run through the sort of theory of a trend and a trend reversal. I think we've done this so many times. I think that you guys are comfortable with the fact that the markets don't move in a straight line. They will zig and they will zag, and I think that is something we all know intuitively. And I think that if we just follow the peaks and the troughs, we can see when there's a trend reversal. The truth is, we'll only know it after the fact. Okay, so over here, the trend starts there. I'll make it red. The trend starts there, and here the trend starts here. There's effectively two things that are going on here. Let's just talk about this. And I would suggest this is very important to try and sort of integrate into our trading psyche. The idea here is we've got a trough, we've got a peak, we've got a higher trough. Okay, got a higher trough. As soon as we have a higher peak, in other words, as soon as price takes out that's when we have the uptrend. So the higher peak actually comes in over here. Okay. It really comes in over there. We'll just put it over there in, just because, well, in other words, we'll see the higher peak where the actual apex is as it progresses. But as soon as it takes out this peak, that's really a higher peak, isn't it? And then if you take a look at the next reference, we've got a peak here. We've got a trough here. All right, and then we've got a lower peak here, and we've got a lower trough that effectively starts over there. And once we get that lower trough in, it comes through and finds the nadir over there. Okay, so the idea here is we've got an uptrend and we've got a downtrend. Now, not only do we have an uptrend and a downtrend, we have effectively the definition of technical analysis. And this is what I think we've got to incorporate into our trading psyche. The definition of technical analysis. The definition of technical analysis is very simple. It's very important. It's 1, to identify the trend. 2, to trade the trend. 3, to exit when the trend ends. Okay, that's the definition of technical analysis. Identify the trend, trade the trend, and then exit once you identify the end of the trend? Well, what we have here is let's use this arrow. Here's the start of the trend. And then what we would do is we would trade the trend. Okay. Let's make it with 3 arrows. Here we would trade the trend. And here is where we would exit the trend. That's the definition of technical analysis. There's nothing more to the definition than that. There are different ways that people utilize their technical analysis. They would use candlesticks, they would use indicators, they would use Elliott wave theory, they would use whatever. But the whole idea is to conform to the definition of technical analysis. Identify, trade, exit. And then what you can do is, you can see, we have identified the short. Okay, here's, well, not the short, we've identified the downtrend. Then what happens is, if you're going short, you trade the trend down, because as long as there is a series of lower peaks and lower troughs, that would be incorporated in the definition. And then here you would have the end of the trend and you would exit. What's the implications of this definition, which is, when I learned technical analysis, this was the official definition that was given to me. It means that we would never get in at the low and we would never get out at the high, because we would not have the, we would not have the, we won't be, if we're at the bottom, we wouldn't have identified the beginning of the trend. If we're at the top, we wouldn't have identified the end of the trend. So we really don't know the trend until after the fact. So the technical analyst is often sort of the last one at the party and the last one to leave, but the one that has the most fun, right? And there's nuances. Let's actually keep this in. For example, let's take this out. Here's the trend. Okay. And we're going to get onto the DAX in a moment, but this is building up to that. Okay. All right, just bear with me here. All right, so if I had to say, where would you guys identify the beginning of the trend? Where would you guys identify the end of the trend? Where would you see the next end of the trend? Okay. Now, hidden in the definition of technical analysis, okay, are chart patterns. So now take a look at this. Here is your head and shoulders. Left shoulder. Here's your head. Here's your right shoulder. Okay. And again, here is your left shoulder. Here is your head. Here is your right shoulder. So the idea is, what is the head and shoulders doing? It's showing in the clearest way. The reason that it's probably the pattern that's most well known, it's showing in the clearest way the transition from uptrend to downtrend and the transition from downtrend to uptrend. And then that goes straight into the definition of technical analysis. Identify the trend, trade the trend, exit when the trend ends. Okay. So we've got these head and shoulders. Now, there are nuances with head and shoulders. Okay. Let's just take a look at the bullish head and shoulders. We're only going to look at the bullish head and shoulders, in fact. So a bullish head and shoulders is what we call inverse head and shoulders, or an inverse head and shoulders, or a head and shoulders bottom. All right. Here's the first variation. There's 3 variations: left shoulder, head, right shoulder. And then once you've got that, you can just connect the neckline. And here we've got a pretty flat neckline. So here's variation 1. Let's do variation 2. Variation 2 is with a downsloping neckline. Okay, it's got a very weak right shoulder. In other words, although the trend comes in here, there's a lot of resistance above it. There's a lot of work for the bulls to do on a downward sloping neckline. And here is variation 3. And variation 3 is terrific because all the work's been done on this impulse. It's taken out all the previous resistance. All the stale bulls have been taken out, and you can see that there is a very strong positive sloping neckline. So if I had to ask you which one is the strongest of the 3 variations, well, I think the one with the neckline is just showing an absolute positive momentum behind it. I think we can all see that this impulse here does a lot of the heavy lifting. It's kind of like, I think the best way to describe it is for a jumbo jet to really get off the ground, it has to be going at full throttle. Once it gets off the ground, the pilot can pull back on the throttle, but it can't get off the ground unless it's going at full throttle. If it's going at half throttle or 1/4 throttle, it's not going to get off the ground. So this is kind of almost, if we had to use a metaphor, the head and shoulders at full throttle. It's the most bullish of the 3. If there's any questions around that, please go ahead and type those through. They're all bullish patterns. The weakest would be this one. The weakest one would be this one, because there's a lot of work to do. You've got to beat this resistance here. Okay, you've got to beat this resistance. So there's still work to be done on this one. Now, where am I going with this? I mean, we've done a lot of theory. Let's turn it into some practice, right? Into some practical application. And the way that we would apply this practically is to bring up the DAX. Okay, and here's the DAX. And watch this. Let's take a look here. Left shoulder. Head. Right shoulder. Okay. What kind of slopes the neckline? Very strong neckline here. Very strong neckline. And what's this doing? Well, it's reversing a downtrend. What's the definition of technical analysis? Well, here's the downtrend. So all the shorts were traded down, and now, well, if you're applying the definition of technical analysis, okay, the shorts would be out of their trades because there's no trend to trade here. It would be the long turns now, right? So you can see left shoulder, head, right shoulder. I've got a RSI here. The RSI here, to me, really, the way that I think my preferred way of using an RSI is really, where is it relative to the 50? Is it above 50 or is it below 50? The 20s and the 80s do come into play for overbought, oversold, but divergences to me are, really poor signals generally. But what is a good signal is if we stay over 50. So here is, we stay over 50. Well, that means there's a lot of momentum. Okay, we go under 50. And the longer we stay under 50, well, that is a lot of momentum to the downside. Okay, well now we're above 50, so the sort of implication of that, the corollary of that is that, well, the longer that we stay above 50, the longer we've got this underlying bullish momentum. Now, I can't predict how long we're going to stay above 50, but what I can suggest is that the longer we stay above 50, the greater the probability of price appreciation. It doesn't mean that we're not going to zigzag. There's going to be pullbacks. There has to be pullbacks. Okay. The previous movements above or below 50 didn't stop the index from zigzagging, which is just the normal play of market participants. Either they're putting on positions or they're taking out positions, they're taking on profits, they're going short, they're going long. It's a whole lot of interplay that's happening, but underlying all that interplay is going to be momentum, and that is on, well, which side of the 50. Now, where it gets interesting is where we go overbought or oversold, because those are dangerous. Those are dangerous signals, but we don't have that at the moment. One other thing that we can do with the head and shoulders, and then I want to go down to the daily charts. The daily chart's going to be really instructive here as well, is that we can add what we call a measured move. Now, we've got to be very careful with measured moves because they're open to abuse. So a measured move is effectively setting up a target. So what you do with the head and shoulders is you'll take the neckline to the, in this case, the nadir of the head, and then what you could do is you can predict it outwards, okay, from the breakout. So the breakout is there, and that's giving us a target. It's giving us a really hefty target here. And I worked it out. I think it's about 16% above from where we are. 18,000. Now, does that mean that we're going to hit 18,000? And the answer to that is no, absolutely not. It doesn't mean that at all. It's a very academic, theoretical application of technical analysis where, yes, we are suggesting a target of 18,000. It may be hit, it may not be hit. What I can say is the longer that the RSI stays above 50, the greater the chance of the target being hit. But that's going to be incidental, okay? What is a better use of the measured move is it tells you the line of least resistance. In other words, we've got the head and shoulders bottom, okay? And we've got a target above us. The line of least resistance is upwards. The bulls are in control. The longs are in control here. Are they going to stay in control indefinitely? I don't know. Nobody knows. That's making predictions, and nobody can predict the market. All we can say is, given the method that we have, is that the line of least resistance for the DAX is to the upside. Does it mean we're going to not have pullbacks? Absolutely not. We are going to have pullbacks, and those pullbacks are going to be super exciting because they're going to be exploitable as long as we stay above 50, as long as the trend remains up, as long as we have higher troughs followed by higher peaks. Okay, so we're in for an exciting time, and for my personal portfolio that my father and I run, just to give you an idea of what we did. I'm not going to mention the stock or the sector or the market or anything, but what I can say is that we allocated our position into two tranches. So we've allocated we've bought on the first tranche, and now we're waiting for the pullback, and we're going to buy in again on the second tranche to smooth in the entrance price. So we're starting to sort of build the portfolios again. But the idea here is we don't know when the second tranche is going to be allocated. It could be allocated at a higher price, it could be allocated at a lower price, but we're looking to smooth the entry. Let's go down to the daily chart. And again, we've got this momentum here. Okay, so we've got the momentum here. And as long as we stay above 80, of course, we've got the positive momentum. But momentum aside, what I want you guys to take a look at here is, what I want you to see here is that we've got this squeeze taking place we've got the squeeze taking place on the Bollinger Bands. Thanks, Anna. Thank you very much. So we've got this squeeze taking place now. I want to go through to this guy over here. This is the DAX. Okay, this is the DAX. We've got a Bollinger Band here. I want you guys to take a look at the squeeze here. Okay, and I want you guys to see the squeeze here. Okay, and then what I have on the bottom here, what this indicator is, I'm just going to show you what it is. This is what we call the Bollinger. Sorry, let me close this up. This is called the Bollinger width indicator. It's a different application of Bollinger Bands. It's using the same formulas. It's a different visual representation of the same information as BBW, the Bollinger Bands width indicator. You can find that on TradingView now. What it does is a very good visual way of seeing when the Bollinger Bands are starting to squeeze. So what you can do is you can put a sorry, that's not the right. Let me try that again. On a horizontal line, right above it. Okay, so I want to just put a horizontal line, and what I can see is I can see when the squeezes are taking place. Every time we get to a point where it's squeezing, we're getting pretty close to this 0.03. The problem with this is you have to be a little subjective. There's no real level that's advocated. You've got to do it relative to the previous squeezes, but I don't think that's too difficult. And then what you can see is once the squeezes, once we hit the squeeze, and then it pops out of the squeeze. In other words, it pops back above 0.04. So let me just show you what I'm talking about. I don't think I'm articulating it particularly well. Is that once we pop above, okay, once we pop above, take a look here. Once we pop above here, we actually start getting a move. The volatility expands. So we now under once we get the Bollinger width popping above, there's going to be an expansion. Now I would expect if the uptrend is meaningful, then the expansion theoretically should be to the upside. It's not absolute. The problem with Bollingers is that it makes no real reference to direction. You've got to try and analyze what direction you think it's going to go in. And what we can do is we can just keep an eye on where we are in terms of our zones. So as long as we are in zone 1, and if there's an expansion, if that Bollinger Band width pops, and if we stay in zone 1, then we pop into the upside. If it starts moving into zone 2, which is the between the blue bands, or if it goes into zone 3, then then the Bollingers are popping up. The volatility is expanding. It's expanding to the downside. But if it's expanding to the downside, I'd still be very interested in that, because that's potentially a dip in the uptrend. And this is kind of where we'll end. The dip in the uptrend is a terrific place to see if we can get in. 1, 2, 2, 3, 1, 2, 2, 3, 1, 2, 2. Let's make this a different color. So what we want to do is we always want to be trying to see if we can exploit that in the uptrend. So that's kind of what's happening on the DAX side. It's pretty exciting given the that strong head and shoulders. Can I say for absolute certain that we're going to continue in that uptrend? No, I can't. Okay, but it's a very strong looking head and shoulders. And how do we know if it's failing? Well, go back to your definition of technical analysis. Identify the trend, trade the trend, exit when the trend ends. Okay, so if we get something like that, that's now lower peak, lower trough. Time to rethink. All right. We'll conclude at that point. If there are any questions, please go ahead and type those in. Alrighty, let's wrap up here, guys. Thank you very much, and have a good day, good evening ahead. We shall chat tomorrow. Tomorrow we will do the crypto minute as well. Thanks very much, guys. Keep well.